stay out of the tricks and fakes and stick to the long term.
There has been a debate for probably 30 years in finance on how passive funds are providing better returns.
Hey, listen, I put in 100 euros and it's now worth 1,000 euros.
For 15, 20 years, the only right answer was US and specifically the technology sector.
Yeah. You can lower your exposure to technology companies, and now maybe they've been falling too much.
Hi everyone, we have a special podcast today from Stockholm. I have a very special guest, Piä Haak, who is a Chief Investment Officer at Swedbank Robur, one of the largest asset managers in Scandinavia. Hi Piä.
Hi.
So, what is it like to be responsible for one of the biggest asset managers in Scandinavia?
It's a great honor and great responsibility, of course, for all our over 4 million clients. And so I'm taking the role that I've received very, very seriously. And it's a lot of fun, and every day is a new opportunity, as I see it, even though in challenging times. So great fun to have this role.
Good. And then tell us a bit about yourself. How did you end up in financial industry, and what was your journey to get to where you are now?
Yes, for sure. It's really been a fun journey, I must say. And I started, I'm actually born the same year as Robur was founded. So that means that Robur was founded in 1967. And I've spent my entire career in the markets, and I've been working with all asset classes from different perspective, both sales side and also the buy side as an asset manager. And I've had this role for 4 years now, and I've been working with equity funds. I've been working for 3 different companies during this time, and I studied economics, and especially with the focus on markets. And so it's a great honor to have this role, and I really enjoy every day of it. And I have had this as a great, one of my biggest interests is the markets and leaderships as well. So this is a perfect combination. So a long history, being over 30 years in the market. So I've seen marginal rates here in Sweden of over 500% and also negative rates. So I've seen it all. Or maybe not.
Well, the markets, I mean, it has been a wild ride over the past couple of months, but over decades there have been very extreme moves and interesting crises. And despite that, Robur managed to become one of the biggest pension asset holders, one of the biggest savings holders in Sweden. Could you tell a bit about history, how Robur funds developed and how this company why it is here now in this quite strong position and trusted by so many clients?
Yeah, of course. Sweden as a whole has had a great savings tradition. I think it's 7 out of 10 adults have a savings account, and we today have over 4 million retail clients. And people in Sweden in general are a little bit risk-seeking, and I think that it's a brave mentality to try new things, and early adopters in terms of savings as well. And I think Robur has a very strong foothold here, especially in the Swedish market and now also in the Baltic markets, where we offer quite a big range of funds. So we have both a really deep and broad offering and a trusted brand, which I think is very important, because the savings is about being long-term and being there for the clients in tough times as well. And everything that we do and has been for a long time is built on sustainability and trust. And that's something that we really want to stick to going forward as well. And we think that will be the long-term winning for both ourselves, society, and our clients as well.
We're just starting to build an investment culture in Lithuania. And
I heard that.
Previously, I would say, and there are a lot of fundamental reasons why it's maybe taking off slow. We didn't have enough capital to invest, and in general, maybe people were some risk averse after some initial attempts at investing, which were not very sustainable.
Yeah.
But now it seems that we're again trying to take a few steps forward. And you're saying that Swedes are maybe more risk-taking, but I'm usually not keen to buy into like these cultural explanations of why something happens. I think culture is not that important in many cases, but maybe the systems and policies taken are very crucial. So maybe you can tell us a bit more about how Swedes built this culture of investing, and what I imagine there are systems and policies in place that helped nurture this culture of investing and saving long term. So maybe you can tell a bit about
that. Sure. I think, as you said, culture is one part, but I think politicians and regulatory framework, really enhancing and making it easy and accessible for retail investors is a very important part, and where both regulators and politicians can play a big part of it, and with pension reforms, etc. And I think you need to educate the people as well, and how to save for the long term and what it is all about. But I think it will take some time. So, I mean, you said you're in an early phase of getting into a more savings-oriented culture. And hopefully you will have a system both from politicians and regulators that will enhance this and could nurture it, and maybe make a little bit more push forward in terms of enhancing and inspiring to have the long-term savings. But I think there is a lot that you can do as well to make a push and to educate people. And I mean, now with social media, etc., you can influence young people, give them examples on if you started a savings with, say, I have a great example for instance, with if you started Technology Fund, is one of our funds that is offered in the Baltics. And if you have saved in that fund €100 each month, because monthly savings is something that I think that you should really talk about to get people on board and to start to save. And if you saved €100 each month for 20 years, it would add up to 24,000, right?
Add up to a lot.
Yeah, but then if you look, what would it be after 20 years? It would be more than 10 times that. So get examples and to inspire people to save for the long term, and how you go about it. Because sometimes it feels like, oh, it's too hard. How do I know what fund I should choose from? Because it's so many. You have equity funds, you have fixed income funds. What's the difference between them? You have active versus passive, etc. So I don't think there is an easy way to go about it. And of course, if you could get some help of Mr. Market, so if you have a better period in terms of market performance, which we had for quite a few years, I think that helps us as well, because then you can tell, hey, listen, I put in €100 and it's now worth €1,000. Shouldn't you save as well, you know? And if you see the market falling off, then people tend to maybe get scared from the beginning, and that makes it harder.
Psychologically easy to start in a rising market, although
definitely,
monetarily probably it's better to start in a falling market.
Definitely, but you should hold on to it. Yeah. And of course, I think we've seen a really good example just here in April, you know, with the Liberation Day from the 2nd of April. We saw quite a big fall in the US market of over 10%. But then, I mean, usually you should really save for the long term and not try to earn money quickly, or think that you should be able to do that by trading, etc. Because if you were not participating in the market for these 9 days, where the US market, for instance, had really great performance, I think it was up like 14%. Those 9 days, if you're out of them, it affects your long-term performance really a lot.
Yeah.
So really monthly savings and education, inspiring people, and yeah, and I don't know, young people are what do you say, adapting and really are curious. I see that in my young people as well, or my sons.
There has been a debate for probably 30 years in finance on how passive funds are providing better returns and at a lower cost, but nonetheless active funds have remained a significant part of the asset management business. What's your opinion about active versus passive, and where do you see the role or benefit of actively managed funds?
I think both has its place, and I think as a saver or investor, you can think that you can use them in a combination as well, depending on your goals. And as you said, we're offering both, and our biggest part at Swedbank Robur, we're managing around 230 billion euros, and the majority of that is still in active funds. So I think we have a big tradition of actively managed funds. And of course, there you get a more concentrated portfolio. So if you say, look at the benchmark like the US, where you might have 500 companies in the benchmark, maybe a US portfolio that is actively managed, you have 50 names or 35 names. So more concentration, i.e. it carries higher risk, but also a better opportunity to get some relative value. And I think in times like we have right now, where the market is quite volatile, it's not only challenges, there is also a lot of opportunities to pick up sort of undervalued stocks, or stocks that have been falling too quickly or for no reason. So I think that's a period where active managers come in and they can add extra value. And of course, the active managers are also very active with the companies, having a close dialogue, voting at AGMs, taking questions really seriously about the proposals, everything related to climate, to social question, to governance, etc. So I think for the market to be well functioning, you need both the active managers and the passive, because the passive, they are offering an exposure to, say, the US market, so maybe not the whole 500 companies, but maybe 400, and in a way that you will have your return very close to the benchmark. And in terms of active, it can be better or it can be worse. And of course, we are always striving to be better than the benchmark, but it's not always that you succeed. So to have the combination, I think it's a good way, and I think it will be the way forward. Do I think that passive will have a bigger growth than active going forward, as we've seen now for a couple of years? Yes, I think passive will grow more than active, but there is still a good place for active as well.
I'm very curious now. Now there has been a very turbulent time in the market, and you're saying that active funds are able to maybe capitalize on that and get some extra returns. Do you have maybe some specific examples of what decisions the asset managers have taken in well, maybe not to name specific names, but in general, how are active asset managers responding to these market conditions?
No, I think for instance, like the US technology sector has become really big. If you look at US tech companies' market cap out of the whole globe, it's about 80%, and the same goes then for the US market. So if you invest into a global fund today, you get everything between 63 to over 70% in US stocks. And then you can think, because everyone is talking about you need diversification, don't put all the eggs in the same basket, etc. But that's a way where active managers really come in as well. Because if you have a passive fund and it says that it should be 70%, then you invest close to 70%. But for active managers, they could lower their exposure to US companies and to the US dollars that has been really struggling, and against the euro as well, I think around 10% for this year. So that has, of course, have an extra negative effect short term on your earnings.
Which surprised a lot of new investors.
Definitely, and I think it definitely surprised the market as a whole as well. And we've seen more flows into Europe, for instance, and not at least for Germany, which really made some extraordinary things in terms of politicians. They get a new government and the financial package that no one thought will ever happen. It actually happened. The ECB has lowering rates.
I've been writing about the German debt brake probably since 2017.
Oh yeah, so you know all about it. Yeah, so that's a way where you can be active. You can lower your exposure to technology companies, and now maybe they've been falling too much, and then you can pick up some really good names, because we all believe in technology and the robotics and the AI, the digitalization, etc. So it makes you even more flexible in your investment style, I would say. Mm.
You touched upon this already. From retail long-term clients' perspective, a lot of like famous strategies on the internet would be like S&P and chill, or just buying the global index and not worrying about anything else. But now with the current market events and maybe seeing less exceptionalism from US, because like for 15, 20 years, the only right answer was US and specifically the technology sector. But now investors globally are, well, having second thoughts about US investments, and we're seeing some turbulent moves in currency markets, and maybe the diversification that for example, a single global fund provides is not necessarily sufficient. And maybe even going full 100% into equities maybe is not enough diversification in times like these. Would you have tips and tricks of how investors should think about regional diversification and diversification between different asset classes? How they should build a resilient portfolio for these interesting times that we live in?
Yeah, for sure. I think first of all, if you're a saver or first time into the market, and that you're just starting your savings and you're thinking about having a monthly saving, which we really encourage, because that means that you're buying when the market is, as you said, lower, and you're buying when it's a little bit higher. But then, first of all, it's great for your interest rate, the compound of interest rate, which is said to be the eighth wonder of the world, and it really is, looking at the example that we just talked about. And then we have the blended funds. So you should think about what are your investment horizon, what's your goal with the investment or the savings that you're carrying on. Is it for education? Is it for vacation? Is it for buying a home? When do you need the money? And that sort of all brings together what type of portfolio that you should have as a whole. Should you have a little bit more equity, a little bit more fixed income to the safe side, because you need the money pretty shortly, etc. And then we have the blended fund, which is also called mixed funds, and they range from 100% in equity to 100% in fixed income. And if you want to take more risk, then you could have a 100% equity fund or 75% into the equity market, and still get 25% in more diversification in terms of fixed income, which means corporate bonds or government bonds, which can perform well when the market is turbulent, give you return, and also gives you great diversification. So I think from a beginner to save, it's great to have these sort of multi-asset, broader portfolios. Other way of doing it is, of course, if you're more interested, and like you and me, we're very into the market and have great interest, like to follow it, etc. Then I think you can build up your own portfolio of maybe a global fund and some more niche fund, like either a thematic fund. We have like new energy, healthcare, or things like that. and also combine it with something that you have interest in, and once again really be long term. It's not like 100 meters Usain Bolt, we're gonna run fast, we're gonna make a quick exit. It's rather the marathon,
the long run.
Yeah, definitely.
What do you think about inclusion of more alternative assets into the portfolio, like real estate, gold, maybe even crypto, or other exotic assets?
Yeah, I think diversification is general good. And alternatives has its place, and I think that is one of the trends that we've seen for the last 5 to 10 years, I would say, in general. And it means for most people, both like real estate, or it could be private equity, investment into unlisted companies, and also private debt, which is the same but from the lending perspective. But there you should think about the liquidity, because it will be illiquid assets, and it will be for the long term, and that's how you should combine it with the regular portfolio. And I would say it's early stage for, and more for high net worth individuals that need that. Otherwise, I think the general daily traded public markets like equities, bonds, corporate bonds are enough for most savers.
Generally safer, a safer bet.
So alternative investments.
Any final tips or tricks or suggestions or advice for new or already veteran investors in Lithuania?
Yes, I would say stay out of the tricks and fakes, and stick to the long term. And I love the quote now when it was announced that Warren Buffett is stepping down from his Berkshire Hathaway. He has a quote of his favorite investment horizon, and that's forever. And I would totally agree with that. You should buy a portfolio, you should buy a stock like you would hold it forever. So be patient, be long-term, be brave, be curious about the savings. It's a fascinating area, and we are here for the long term, and I hope all our clients and yours as well are there for the long term.
Thank you.
Thank you.
It has been a pleasure talking to you.
Thank you. Great to be here. Bye.